In this video, you will learn about DraftKings, the company, their financials, and their stock. This is a Cathie Wood holding. We'll talk all about it. We'll show you the financials using our Everything Money software and move toward what you should be paying for DraftKings moving forward with our stock analyzer tool. If you want to trade at DraftKings at a quicker pace, you can join Mo and that glorious Bidnass Nation in our community, and he will show you all the charts and trends. I bring your questions to a couple guys that own and operate over $100 million in multiple businesses, real estate, and stocks, and they'll help us, you and I, with a mindset whether we should be buying or avoiding DraftKings. I bring in Paul Gabriel.
All right, thanks, Seth. So first off, guys, follow us on Instagram. We have a new Everything Money investing account, and then also follow our 3 personal accounts, because every time somebody follows us, our ego goes just a little bit higher, which is really important to us. Okay, so DraftKings, this is our exclusive Everything Money software. 8 pillars, DraftKings, click it, don't tick it. All right, so this was obviously a SPAC, special purpose acquisition company or whatever it was. Oh my God, look at this high. $71, that was $74.38. And the low was $25, and we're pretty close to that low right now. So if I was sitting here in March of this year telling the channel that this company that's just gone basically straight up, well, not straight up, but since, what was this date? December, Christmas, 2 years ago, you just said I was crazy. Now look at it. It's down 60%.
Yikes.
All right. So DraftKings, it's a $12 billion company. Now, first off, guys, here's the issue with DraftKings. Remember, I'm a value investor. And for me, I feel better when I see a long history. I want to be able to see how has the company reacted to a myriad of events, how they've reacted to falls in revenue, falls in profit, et cetera. All I got here is 3 years of data. That's all I got. Now, granted, it showed a lot of revenue growth, 56 million, 385, 1.14. But I can't do my proper 8-pillar analysis with this. Now, an example company you could look at maybe would be something like PENN National Gaming. They've been around for a while. They are affiliated with Barstool Sports. But look at the difference in their history. This is the income statement for PENN Gaming over the last 10 years. This is the history that we have for DraftKings. Very little.
Now, Paul, this did not phase Cathie Wood to putting DraftKings in her ARKK ETF. It currently makes up 3% of ARKK, and she bought in late September at $53. So she saw something that you're too stupid to find, Paul. You know that.
Yeah, the thing that I'm too stupid to find is...
Sorry about that. Sorry.
No, the thing... Listen, she doesn't understand business. She doesn't understand investing. She is extremely, extremely, extremely stupid. The other day, she talks about how we're in deep value territory, yet she criticizes value investors as not understanding hype, not understanding disruption. And I look at that saying, okay, so I don't sit there and when a value stock goes to my level, I say, oh, it's highly disruptive. But when her disruptive stock doesn't work, what does she say? Oh, it's deep value now. Do you find the irony in all of that? Like, she criticizes value investors and then uses the very terms they use when stocks fall that she has bought, and she can't explain why. Her assumptions are all insane, have to have insane levels of success in order for her assumptions to come true. It's just not going to happen.
Yeah, she's purely a speculator.
Purely a speculator. She's trying to ride waves. More power to her. But the same wave she rode last year, she didn't sit there and say, no, guys, it was a hype market. It was a little crazy. No, she rode it. But now that her ETF is down, is it 40% now 40%. Year to date?
Yeah.
I don't hear her sitting there saying anything about now she's like, oh, no, it's deep value now. It's like, so wait a second. This is what I don't understand. She's speaking out both ends of her mouth. Guys, the fact that she likes DraftKings tells me enough what I need to say about DraftKings. I am Steve Carell in the movie Moneyball when he's sitting across the table from that guy who's bragging about his net worth in Vegas and eating sushi.
The Big Short.
Sorry, what did I say? Moneyball?
Well, you love both movies, Paul.
I do. But she is the guy across from me. She's the person across from me when I get up and go short everything this person touches. She's absolutely stupid. She's a moron. She is no different than Jim Cramer. I don't know how to explain it. The bottom line is DraftKings, guys, look at last year. DraftKings brought in $1.14 billion in revenue. It lost $1.44. So as an example, let's say last year you brought $100,000 home. You spent all that 100 and then you spent another 120. That's what she did. That's what DraftKings did and that she thought was a good idea. It very well could be. They could be investing for growth. I get that. But along the way, you know what else they did? They also issued in the last 3 years 33% more shares. It could pay off for them. And this company could be a great company. However, I think it's going to be, remember, Amazon fell from $113 to $6 in 2000 to 2001 or 2 before it did its major run up. So whenever somebody says to me, oh, but look at Amazon, I went from 100 to 3,000. Yeah, but it went to 6 between them. And guess what? If Cathie has this company go from $54 down to 5, she'll be selling it so fast it'll hurt her.
Yeah, I think that's the point, Paul, is for new investors to understand is, people will mention her past performance, but if you yourself,
it's 1 year.
Yeah, you're right. I mean, if you yourself at home keep buying companies that don't make money, you can only buy so many before you really start losing money. She might get lucky as hell on DraftKings as she has on Tesla, but if you keep up that same process, you are going to be in trouble, Paul.
Yeah, and guess what? Going back to 2016, it still has done well. If you look at the ARKK ETF right here, it was $20 and now it's $98. So somebody can make the argument, hey, Paul, it's still, I believe that ARK will be selling, if it keeps his holdings, ARK will be selling for a lot less than $20 a share in sometime in the next few years. The only thing it can do, the best thing Cathie Wood can do for investors is sell every stock she owns and put it in a 5-year T-bill, 5-year treasury. And that's the only way it's going to make money based on these holdings, just selling them all. The top set 20 holdings that she has, 17 of them lose money. What are you going to do? And the ones that are making money are selling for nosebleed valuations. So I look at DraftKings and I think, okay, I mean, what are we going to, is there any cash flow? No cash flow. Balance sheet. How much debt is there? Oh, $1.5 billion in debt. Sick. Income statement. So I look at this guy's going, pass. Mo, can you trade it?
Oh, of course. I mean, you could trade it today if you wanted to. This is getting into, let's see here. I'll wait till you pull my screen. Perfect. So, look at this nice engulfing candlestick you're getting today. The only problem I see is it's almost 3 o'clock in the afternoon and your volume is decelerating. That's the only issue I see here. But wait for tomorrow. See if this thing moves into the sweet spot. Red and yellow line moves into the sweet spot. See if you increase volume a little bit and you can make a charge here. I mean, this thing, it is definitely a hype stock, gets the attention of a lot of people. If you could just get an influx of volume in this, you will do very well on it. I would probably not go on a long-term chart over here because the last time this thing had any good trend was September of 2010. That was it. So it's very difficult to trade this thing long-term, to run right through the sweet spot to the top side. I would stick to swing trading it or come over here and day trade it. This is today. I mean, you could have, this blue line signifies the beginning of the day. So you moved into you moved into your 80% sweet spot area. You had a big influx of volume, good engulfing candlestick right here. And you could have rode this thing through the afternoon and made your exit at some point. Let's see. Probably would have been right in here.
Yeah, go to the worst case number. Yeah, do the worst case number. What was the worst case number there?
I'm going to pull it down here. So this number, let me pull up my tweezers. Oh, 29.76. You could have entered at, say, 29.59. So what's that percentage, Paul?
Almost 0.5%.
There you go. So 0.5% on your invested capital today. Not a bad day. Better than what you would be doing.
And that's assuming you sold it at the absolute bottom of that wick.
I'm picking the worst buy time and the worst sell time. So you could have definitely had a little bit more return there. But this just shows you what you could be doing with a company like this that you don't want to be invested in long term. So there are options out there. If you want to learn those options, come and join me in the Bid and Ask Nation. You get my Trading 101 series, which is all of these rules that I go through. Long-term trading, swing trading, and day trading. You get the Employed Trader series, which is 6 stocks that I go through every single day and update you on. My exclusive Saturday seminars that I do once a month and a Discord community of 950 plus people. Come and join us, learn the rules, and be successful.
Okay, guys, if this level of investing speaks to you, you can have the software. Paul, tell them how.
So guys, we created this software because early on in the channel, our subscribers wanted to be able to analyze their own companies without having to wait for us to make videos. So we just merely made the software. Now, granted, it took hundreds of thousands, but it is now here. You can join it now. Here's what you get. You get everything you saw in the video we just did. You get everything in the mobile app. This is all mobile friendly. Carry anywhere you go. If you're on the bus, anywhere you can use it. You get 30 years of financial data. You get that stock analyzer tool, our most important aspect. You get exclusive daily content, between 1 and 3 videos every single day, just from us, only for the users of our software. You get access to Seth Mo and I. You get all the future growth of the software too, which includes real estate calculators, stock screeners, and most importantly, what's active right now, you get access to our community of like-minded investors. So many people around the world are alone in how they think about investing. But in our community, over 6,000 people are talking every day in organized chats, talking about all of their favorite investments, why they look at them, why they don't. This includes crypto. This includes Tesla. We're not discriminating. It's only value. It's all types of investing, all available for you for only $1 per day. Less than a cup of coffee, $1 a day. Whatever price you sign up for today is locked in for the future. Sign up now. There are 2 ways to sign up: everythingmoney.com or Patreon. The benefit of everythingmoney.com is if you sign up right now, you get no sales tax for quite a while because we're not big enough yet. So as you saw, compared to our other competitors, we are vastly more cost effective, and you get just as much, you get more than you get from the competitors. So sign up now, everythingmoney.com, $1 per day.
Final take on DraftKings as a value investor.
I'm just going to wait till they have a more established history and cash flow and profit. Done.
All right, that's our take on DraftKings. We will keep you posted. We don't like it now. We may like it in the future. Stay calm and 8 pillar on. See you next video, guys.